Today on Business Insight, we take a look at the volume, prospects and challenges of cross-border transactions between Nigeria and neighboring countries. Welcome aboard. I am Vivian Oguche. So good to see you this morning. Well, let's set this boat rolling with the day's top stories. Alfreda Ambebasi is standing by.
Thank you, Vivian. A beautiful morning to you. Here's a brief rundown on our top stories this morning. Africa's exports growth could reach $1 trillion in 2035. England's King Charles III is set to attend a technology showcase in Nairobi, Kenya. Details of the stories and more coming up after this short break. Stay tuned. Welcome back. The World Bank estimates that the African Continental Free Trade Area, AfCFTA, will increase Africa's income by $450 billion by 2035 and increase intra-African exports by more than 81%. Experts say the full implementation of AfCFTA could further boost trade by 29% at an annual growth rate of 3%. This anticipated trade expansion outpaces the global average, with specific routes such as the East Africa-South Asia corridor leading the way with a remarkable annual growth rate of 7.1%. Furthermore, the adoption of digitalization and digital supply chain financing is predicted to be a game changer that could unblock billions of dollars in export value across key African markets by 2035. And away from that, Boa Cement has announced a significant price reduction for its cement, slashing the factory cost to 3,500 naira per 50 kg bag, effective from 2nd October 2023. But despite this official declaration, the anticipated price drop has not yet materialized in primary markets, notably in Lagos, where cement products are still being retailed at the previous rates of between 5,300 naira and 5,500 naira. Retailers and cement distributors have confirmed that the promised price reduction is yet to come into effect. Various challenges, including logistical issues and operational costs, have been cited as reasons for the delay in passing on the reduced prices to consumers. In a new development, England's King Charles is set to attend a technology showcase in Nairobi, Kenya, during his state visit from the 31st of October to the 3rd of November 2023. This visit aims to celebrate the strong relationship between the UK and Kenya and the partnership between the two countries. King Charles III will meet with Kenyan entrepreneurs, highlighting Kenya's vibrant tech ecosystem, which ranks as the third best in Africa and the first in East Africa, with over 1,000 startups across various sectors. The growth of Kenya's startup ecosystem can be traced back to 2006, following the deployment of an underwater internet cable, which boosted connectivity and spurred the establishment of the first startups. Notably, the visit aligns with Kenya's preparations to mark 60 years of independence. Moving on, China has saved nearly $10 billion this year due to record purchases of oil from countries under Western sanctions, including Russia, Iran, and Venezuela. The unintended consequence of sanctions imposed on these countries has been to lower oil import costs for Chinese refiners. China's purchases from these three countries amounted to 2.765 million barrels per day of crude by sea in the first 9 months of 2023, displacing alternatives from other regions. Although they represent a small portion of China's overall oil import expenses, these savings have greatly boosted independent refiners. Coming up next is the stock, commodities, and currency market trends. Stay tuned. Welcome back. At the end of Wednesday's trading session on the Nigerian Stock Exchange, NGX, a total of 410,320,989 shares were traded in 5,637 deals, corresponding to a market value of 4,456,776,970 naira 30 kobo. Compared with the previous NGX trading day, Wednesday's data shows a 59% improvement in volume, a 43% decline in turnover, and a 13% decline in deals. The current market capitalization of the Nigerian Stock Exchange is 36,900 billion naira. In the aggregate, 119 NGX listed equities participated in trading, ending with 18 gainers and 17 losers. Thomas Wyatt Nigeria led the gainers with a 9.81% share price appreciation, closing at 2 naira and 35 kobo per share, followed by Dar Communications, Cornerstone Insurance Company, and Transcorp Nigeria. On the losing side, Omatech Ventures came out last with an end-of-day price depreciation of 8.33% at 44 kobo per share, followed by Owando, Africa Prudential, and Caverton Offshore Support Group. Nimeth International Pharma recorded the highest volume of 163 million traded shares, followed by Access Holdings, Zenith Bank, and Fidelity Bank. At the close of Wednesday trading session on the Malawi Stock Exchange, MSE, a total of 257,939 shares were traded, equivalent to a market value of 31,783,568 Malawian kwacha and 93 tambala. Compared to the previous MSE trading day, there was a 43% increase in trading volume and a 2% increase in turnover. The current market capitalization of the Malawi Stock Exchange stands at 6,220 billion kwacha. In total, 10 equities listed on the MSE participated in trading, with 4 experiencing losses. FDH Bank witnessed the most significant decrease in value with a 0.82% share price depreciation, followed by Airtel Malawi, National Bank of Malawi, and Ilovo Sugar. There were no gainers on this trading day. FDH Bank had the highest trading volume with 140,342 shares traded, followed by Telecom Networks Malawi, National Insurance Company Holdings, and Airtel Malawi. And we turn to the commodities market, where wheat is currently priced at 555.25 US cents. Gold is valued at 1,876.17 US dollars. Silver is trading at 22.05 US dollars. Copper is being exchanged at 3.63 US dollars, and Brent crude oil is priced at 87.79 US dollars. And that's it on the news this morning. I am Alfreta Ambebasi. Vivian Oguche is waiting to walk you through the next phase of Business Insight. Stay tuned.
Glad to have you back. So Nigeria is a country in West Africa and it shares land borders with the Republic of Benin to the west, Chad and Cameroon to the east, and Niger to the north. Now, its coast lies on the Gulf of Guinea in the south and its borders Lake Chad to the northeast. Now, reports show that during the last 25 years, the exports of Nigeria to one of its neighbors, Benin, have increased at an annualized rate of 6.94% from $25 million in 1996 to $134 million in 2021. That's massive, yeah? And in 2021, Benin exported $24.2 million to Nigeria. Fast forward to 2023, what's going on? This and more we shall be talking about this morning. And of course, I am not flying solo, yeah? Joining me virtually is the chairman of Accountability, Candor and Transparency Network, Souq Segun. Segun, it's good to have you this morning.
Thanks for having me.
Thank you so much. He is also, my guest is also a business and financial consultant, as well as a policy analyst. So let me begin with this, right? Nigeria is surrounded by neighbors. Are you impressed with the volume of trade so far between Nigeria and her neighbors?
Cross-border transactions are of paramount importance in global trade and economic progress. This analysis delves into the opportunities and obstacles related to cross-border trade between Cotonou and Nigeria, with a specific emphasis on trade dynamics, regulations, and the resulting economic effects. Cotonou serves as a gateway to Nigeria's immense consumer market, home to over 200 million people with strong demand for various goods and services. The two countries have complementary economies. Cotonou specializes in port delivery and light manufacturing, while Nigeria has a robust oil and gas sector, agriculture, and a growing tech industry, creating trade opportunities. However, challenges hinder the smooth flow of cross-border trade. Regulatory complexities, including customs procedures and differing standards, lead to delays and increased costs. Outdated infrastructure and inefficient customs processes at border crossings impede the movement of goods and services. Additionally, the use of different currencies, for example,
Well, I do apologize for that mix-up. That package put together by my colleague Alfreda Ambibasi will come much more later in the show. In the meantime, I was asking Souq, my guest today, if he's impressed with the volume of trade between Nigeria and her neighbors. So I'll have you answer your question, or my question, Souq, if you can hear me clearly.
Yes, I can hear you. Can you hear me?
Absolutely.
All right. Yes. Okay. So, well, if I'm impressed, I'll say no. And I say no because of the general challenges that Nigeria has as with regards to its trade, its cross-border trade generally. So if we say with our neighbors, you know, we can look at that from a very broad perspective and say, look, everybody in the world is our neighbor anyway. It's a connected and global village today, but then we can narrow it down and say to Africa, and we look at what is happening with the Africa Continental Free Trade Agreement, and then narrow that down further to ECOWAS, and then to our immediate neighbors in Benin Republic, Niger, and maybe Cameroon. And any one of these stakeholders that you decide to analyze and look at, you find that we are grossly underperforming relative to our potential. And that's why I say I'm not impressed. So looking at a growth of, like you've said in your analysis, about 6.9%, from $25 million in 1996 to 134 in 2021. When you consider the fact that our total exports in that same 2021 was something around 59 billion US dollars, and you realize that that means that this 134 million dollars is less than 1% of that figure, then you realize how bad, you know, our situation is with regards to cross-border trade with our neighbors. We can do much better. So the question we should be asking ourselves is, why are we not doing as much as we can? You know, and I think that the answers to that are, you know, relatively self-evident. It's the fact that, one, our major export is oil and gas, which means that we're exporting to places like China, to places like the United States and other developed economies, as against our immediate neighbors. The other things that we produce, which represents a much smaller fraction of our total exports, are the things that we then, you know, send to our neighbors in ECOWAS and the rest of Africa. And, you know, those things are simply not large enough in terms of volumes. In other words, we need to increase our export capacity to take full advantage of, you know, the economic activity that we should be getting from neighboring countries and across Africa.
Fantastic. Now that you brought that up, you know, you talked about exports to other countries, and I have a little information here I'd like to read out to you, and then you give me your reaction to that. Now, the most recent exports are led by crude petroleum. That's Nigeria's exports to other countries. Crude petroleum, $41.8 billion. Petroleum gas, $8.52 billion. Special purpose ships, $1.25 billion. Cocoa beans, $779 million. And refined petroleum, $667 million. Now, this is what I want you to talk about, because you brought it up. The most common destination for exports of Nigeria are India. Can you beat that? India, Spain, United States, France, and China. African countries are missing in this list, right? You already attributed to that. I mean, what's going through your mind as I read this thing out to you?
Look, it's very simple. It just simply means that we have a lot of work to do as a country. The reason you see that, like I said just now, is that the bulk of our exports, that you read out, if you add everything that you read out together, it's about 60 billion US dollars. The bulk of that, about 50 billion, if not 51, 52 billion out of that, is oil and gas related. And who is taking oil and gas out of Africa? Who is taking oil and gas from us? It's the developed economies. It's those people that you listed out: China, India, the United States, Spain, the EU, Germany, and all of that. Our neighbors in Africa, their concern is not, you know, they also have oil. Most of them also have oil anyway. So they're not going to be buying oil from us. And they're not, you know, they don't even have the volumes for the oils that we're pumping out anyway. So we'll take that oil somewhere else. So the challenge is that the things that they need, we are not producing enough of it. So we simply need to reverse this trend. We need to do more with improving our production capacity so that we can produce what we use locally and then produce enough to ensure that, having satisfied our local demand, we can export, you know, and take full advantage of the markets that are available. The markets in Africa, according to the estimates of, you know, the World Bank, we're talking something in the region of about 500 billion US dollars, you know. So it's a massive market. Nigeria needs to be more up and about to take full advantage of that market.
Some lists, you know, a list, actually. I'm going to be reeling out these things to you. I also want you to react. Now, based on findings we've made, some of the reasons are responsible for low volume of trade between Nigeria and other African countries include poor transportation and communication links, use of different currencies, taste for foreign goods, production of similar goods, low level of technology, trade restrictions, colonial ties, inadequate capital, low level of savings, political instability and poor quality of goods. Do you agree?
Yeah, 100%. So if you look at the African continent, first of all, you realize that the African continent is a continent that is struggling with a lot of challenges. It's not just Nigeria. Nigeria is a part of Africa, and we also have these problems. We have huge infrastructure deficits that are a major constraint and limitation for trade, generally speaking. It applies even in Nigeria. Even locally here, you find that the cost of doing business is exorbitantly high compared to other parts of the world, simply because of this infrastructure deficit that we speak about. Take power, for example. Take road transportation, for example. The lack of rail, which is cheaper by a significant proportion than transporting things by road, more efficient, takes lesser time, and all of that. And of course, that time is money. So if you're spending more time than you should transporting goods from Lagos to Aba, to Onitsha, or to Kano, or to Maiduguri, factor all of that, puts insecurity into that mix, and you realize that we have a serious problem. So all of these problems are preventing us from taking full advantage of the markets that are available around us. In fact, they're preventing us from maximizing the potential that exists locally, not to talk of then going out and talking about export markets, and all of that. And then, like you said, reading out that list, there's also the economic impoverishment of the continent, which means that even though we have a large population in these countries, and if you like, in the entirety of Africa, a large chunk of that population, they are not economically viable. They don't have active demand for goods and services because they don't have the money. Disposable income, and all of that is heavily constrained by extreme instability of macroeconomic indicators. Inflation is very high across most of Africa. It's extremely high in Nigeria. Unfortunately, right now, we're talking about 25.08%, according to the last report from the NBS. Poverty prevalence is very high. So, how do you do business to the volumes that you need to do them, or that you have been capable of doing with these types of constraints? So these are the challenges that we have. And you realize when you do this analysis that the problems are fundamental, and they all come across as a governance problem. We have a governance challenge across the entirety of Africa, Nigeria inclusive. And until these challenges are fixed, then Nigeria will continue to be regarded as a developing country, if you want to be charitable. And if you want to be very mean with your choice of language, you could say an underdeveloped country. And the same goes for our neighbors, whether it's Benin Republic, Togo, Cote d'Ivoire, Niger, and any other neighboring country you want to speak about. So we have a long way to go. We have a lot of work to do as Nigeria and as the rest of Africa before we can take full advantage of the trade opportunities that ordinarily should exist, amongst us.
I'll go with developing country. That works for me. Developing nations. Yeah. So you talked about challenges and governance issues. So I'm going to be asking you to make recommendations towards the end of the show. But my colleague Alfreta Ambibasi has put together a package on this same issue. I'd like for you to listen, and when we come back, make your reactions. Take a listen.
Cross-border transactions are of paramount importance in global trade and economic progress. This analysis delves into the opportunities and obstacles related to cross-border trade between Cotonou and Nigeria, with a specific emphasis on trade dynamics, regulations, and the resulting economic effects. Cotonou serves as a gateway to Nigeria's immense consumer market, home to over 200 million people with strong demand for various goods and services. The two countries have complementary economies. Cotonou specializes in port delivery and light manufacturing, while Nigeria has a robust oil and gas sector, agriculture, and a growing tech industry, creating trade opportunities. However, challenges hinder the smooth flow of cross-border trade. Regulatory complexities, including customs procedures and differing standards, lead to delays and increased costs. Outdated infrastructure and inefficient customs processes at border crossings impede the movement of goods and services. Additionally, the use of different currencies, for example, the West African CFA franc in Cotonou and the Nigerian naira in Nigeria, complicates financial transactions and poses exchange rate risk. Additionally, the use of different currencies, for example, the West African CFA franc in Cotonou and the Nigerian naira in Nigeria, complicates financial transactions and poses exchange rate risk. Political instability and security challenges in the region also affect cross-border trade. Addressing these challenges is crucial for ensuring a stable trading environment. To unlock the potential for economic growth, it's essential to simplify customs and import-export procedures, develop modern transportation infrastructure, collaborate on harmonizing standards and regulations, and cooperate on security matters. These measures can create a more favorable environment for cross-border trade and cooperation, ultimately benefiting the economies and citizens of both nations. Alfreda Ambebasi for Business Insight.
Thank you, Alfreda. So, Shokpito, if you can hear me, one of the things she talked about that serves as an impediment to trading between Nigeria and Cotonou, which was what she zoomed into, was outdated infrastructure. But what I want you to address was the other one she said, use of different currencies. How big of a deal is this? Why is this a problem?
Yeah, well, I mean, obviously it's easier to trade if you're trading with the same currency, because then you don't have exchange rate issues. You don't need to try to determine the value of my goods. So if I produce goods that cost me 1 billion naira, for example, what's the value of those goods in CFA francs, or in the United States dollars, or in British pounds? So I have to do some extra work to arrive at the right pricing for those goods, having taken into consideration things like the exchange rate risk that I will bear. Because, you know, when I sell to you, replacing the costs, my inputs, you know, the things that I use to produce those things, replacing them, I have to be mindful of the fact that exchange rate might have moved against me by the time I'm producing again, and which will then affect my ability to replace those materials. So exchange rate issues would always be a challenge in cross-border trade, but it should not be seen as a serious impediment. All over the world, this issue is there, and that's why you have hedge products. That's why you have futures markets, for example, that will ensure that you get currencies at the rates that you need them when you need them. Those markets are simply not mature enough in Nigeria, and to a much lesser degree, in fact, in those markets that we trade with. So exchange rate issues are not supposed to ordinarily be a challenge. It's normal across the world, but because of the shallowness of our financial markets, these things are indeed a problem. So how would we have solved this? There's always been this attempt to have a unified currency across the ECOWAS region. That effort is still ongoing and has been ongoing for over, if I'm not mistaken, about 30 years. And that unification, similar to what we have in the European Union, where they use the euro in a lot of these countries, has failed and will continue to fail because the macroeconomic indicators that must align simply cannot align because of our governance issues. You see, so exchange rate is a problem. Yes, it shouldn't be, but unfortunately it is. And it's just going to continue to be an impediment to trade until we're able to sort our local governance issues out across those different territories.
Fantastic. You just took the words right out of my mouth. You know, ECO is actually the proposed name for the currency that they've been working on, you know, producing for West African nations. Well, earlier on, you talked about the free trade zone. And one of the news items we mentioned at the start of the show was that the World Bank has estimated that the African continental free trade area will increase Africa's income by $450 billion by 2035 and also increase intra-African exports by more than 81%, right? But it said, it made recommendations that to avoid various challenges and pitfalls, digitization should be looked at, right? Adoption of digitization and digital supply chain financing is predicted to be a major factor. I want you to react to this.
The Continental Free Trade Agreement, that has been signed by a majority of African countries, is a great initiative. And one would imagine that eventually it will come to full bear, and we can reap the benefits of that. But like that report has said, there's still a long way to go in dealing with foundational structural challenges across the various markets to ensure that we can take full advantage of it. Nigeria was a bit slow getting into that party. We finally did, and then we've set up a secretariat, I think under the Ministry of Trade and Investment, to manage our interactions, under that platform. We've taken part in the global tariff structure of CAFTA, even though we joined late. And the information out there now is that Nigeria is trying to onboard about 10,000 businesses to take full advantage of this. But like that report has said, cross-border transaction settlements, for example, will be one area that will face challenges. Good enough, we have a lot of payment and settlement fintech companies coming on stream across Africa, especially Nigeria and Kenya, that should deal with this problem to a certain degree. But we still have a long way to go. And then if you step back beyond that and look at various infrastructure problems, especially power across the entirety of Africa, but in particular because we are Nigerians, we're looking at Nigeria, our energy problems are going to continue to be an impediment for us to take full advantage of the opportunities in the free trade agreement. It makes us uncompetitive when you compare our goods. The goods that we're trying to export, few as they already are even uncompetitive because the business environment is simply exorbitantly expensive to run in as a result of power, as a result of the poor roads, as a result of corruption, in government circles. The ease of doing business issue is still there. So we can't compete, with goods that are coming from China, for example. Can't compete with even goods that are coming from some parts of Europe. So we need to deal with these things for us to take full advantage of CAFTA and look at, take a good share of that 500 billion plus that the World Bank says is available as additional income for Africa.
When you say we can't compete, is it we can't or we are not? Do we have the potential to compete with these nations? I'm thinking
absolutely,
because we are
absolutely.
slowly moving towards the end of the show. So we've talked about the volume, we've talked about the potential, the challenges. Let's now talk about the potentials, right? Nigeria alone is a huge market. And earlier on you said probably one of the reasons why there's a low volume of trade is because Nigeria is not producing what her neighboring countries would need. Yeah, so walk us through some of the potentials that are embedded in this country that will boost, cross-border relations between Nigeria and her neighbors.
Okay, so let me give you one example. We can, when I say we can't compete, I simply mean that we're not competing. We can't compete based on our current realities, based on our current macroeconomic realities, based on our current infrastructure realities. We are simply unable to compete with the rest of the world. So we need to fix that. Of course, we can compete in terms of our, potentials, but we need to fix these issues in order to then compete. So, what can we do? Look, let me give you an example. If we fix the Ajaokuta steel complex or find an alternative solution to that problem, what is the problem? For you to produce to the level that is required as a nation, you must have a steel industry that is vibrant, that, so that you can produce on the industrial level. Right now, our production is limited to consumptive production, food, and other low value items like that. We should be producing cars. So we have a company called Innocent in the east of Nigeria and a number of others who are producing vehicles. But they are not manufacturing locally produced vehicles. They're more or less, if we're being truthful with ourselves, they're assembling because they still have to bring in engines that are produced in other parts of the world. Why is that the case? Because we do not have steel, so we can't produce those things. So if we're able to fix our steel base, just giving you one example of the things that we can do to take full advantage of the markets around us, then we can produce cars that are produced locally from locally sourced materials in an environment where power is available, where transportation of those things are easy. Then you can imagine that we'll be able to, our local vehicle producers can then compete with the likes of Toyota and Honda, for those markets out there. But we're not doing this now, so that's just one example of some of the problems that we have and how we need to move forward to take full advantage of the potential out there.
Fantastic. I mean, producing steel might be long term. How about something short term? Agriculture, for example. Nigeria used to be a huge exporter of agricultural products. Take, for example, the granules. I mean, you used to have a granite pyramid in Kano. Nigeria was very well known for that. Nigeria used to be a huge exporter of cashew nuts. I mean, don't you think this is an angle the country should begin to explore?
Well, I mean, our exports in some agricultural produce is still not too bad. But the challenge we have is that we're exporting primary produce. We are not adding any value to those things. So if we produce groundnuts, how about you exporting peanut butter? You produce tomatoes. How about exporting puree, tomato puree and tomato paste? If you have cocoa, how about converting them to chocolates and then exporting them? So our agriculture is not doing terribly, even though we can do far better. So right now, agriculture is contributing about between 23 to 25% to our GDP, but contributing a far less proportion of the government revenues. So we need to fix the productive base of that sector. Just as an example, we need to ensure that we're mechanizing that sector and leveraging heavily on technology to improve productivity. And then look at value add, create a value chain that would add value to those produce so that we're not exporting raw materials, we're exporting finished goods in the agricultural space. And then we can say we're taking full advantage of that sector. And that same argument goes for any other sector that you can speak about. Maybe one of the few areas where we have a bit of a shining light is in the tech space, where tech entrepreneurs in Nigeria are creating services that they are pushing out there. The entire west coast of Africa and East Africa, you have Nigerian banks, you have Nigerian fintech companies competing very favorably and doing very good. But there are so many other areas where we need to improve. Agriculture, transportation and logistics, that all of these sectors we can do far better. We're not even talking about our solid minerals that is just lying there fallow, completely untapped, so we can produce all these things and ship them out to our neighboring countries and the rest of Africa and indeed the rest of the world. So we have a long way to go.
Fantastic. We'll take a short break here, and when we come back, Ashokweto and I will continue this conversation. Stay with us. Welcome back. You're watching Business Insights on Souq News. My name is Vivian Oguche, and I got with me Shokmito Shegun. Shegun is the chairman of Accountability, Candor and Transparency Network. He's also a business and financial consultant, as well as a policy analyst. And we have been talking about the volume of trade between Nigeria and her neighbors, right? We have also been talking about potentials as well as challenges. Right now, we're talking about the potentials. But there's something I would like to ask you, Shokpinto. You know, once upon a time, borders were closed in Nigeria to curb smuggling, right? There are a number of borders that are still closed and all of that. Does this serve as an impediment also to a robust trade between Nigeria and her neighbors?
Thank you for bringing that point up, because I was going to talk about it at some point. When that policy action was taken, I was one of those. I don't know whether we were few or not who was staunchly against it and who condemned it roundly. Whilst not, ignoring the problems that may have made the government explore that approach, and maybe that's what they consider to be a solution. But for me, as a firm believer in free trade, liberalism, liberal markets, even though you would also have to provide some social face to capitalism, closing of borders is simply not, is a no-no. It's not something that you should consider. The reasons and the problems that we had, smuggling, for example, security challenges in terms of cross-border movement of human beings and cross-border movement of light weapons, for example. Those are some of the reasons that were given. Smuggling of rice, smuggling of oil, smuggling of chicken. All of these things should not have resulted in us closing down our borders and killing off businesses, local businesses that were also exporting goods to neighboring countries. A lot of producers and manufacturers in Aba, in Onitsha, in Lagos, their markets, their predominant markets are actually in, these neighboring countries. And when we shut those borders down, some businesses actually folded up. So the problem was smuggling. The solution should not have been to close our borders. You kill cross-border trade, obviously, as a result of that type of policy. The solution should have been for you to clean up your agencies of government who were responsible for policing those sectors and those areas of operations of human activity. So customs, immigration, that's their work. That's the job that they had. The corruption in those agencies allowed and is still allowing, in spite of that border closure, free flow of unregulated movement of goods and human beings across these borders. That border closure did not solve this problem in any way. The problem remains with us. We've closed the border. We've lost billions and billions of naira, at least hundreds of millions of dollars in business, and the problems remain with us. So, there's a new government in place now. I am absolutely certain that there is no way that this government will consider border closure as a solution to some of these problems, security, smuggling, all of that. So it was a bad policy. We suffered for it. And I think that it probably contributed to some of the recessionary tendencies that we saw in our macroeconomic indicators during that period. But thank God that that's behind us to a large extent. Some borders remain closed, and I would expect that this administration will do everything that they can to open our borders as quickly as possible, but improve the policing of those borders, reduce the number of uncontrolled crossing points that we have, as a country with our various neighbors, whether it's Niger, whether it's Cameroon, whether it's, Benin Republic or Chad. We have too many places where people can just cross unhindered. So our borders are porous, as the immigration service will say. So we need to fix this problem rather than close down trading opportunities.
This is what I hear you say: solve the issue of porous borders, but do not close the borders. Right?
Absolutely.
Fantastic.
Absolutely.
So as we try to wrap this up, what do you think are incentives that will spur on trade between Nigeria and her neighbors?
we need to look at our tariff structure. I think this is absolutely critical. That's one. We need to come up with a set of tariffs that would achieve our own objectives as a country. And two, and absolutely critical, we need to fix our ports. We need to fix, the Apapa port. We need to fix, the Lekki port that is coming on stream, the ports that we have, down the Delta. We need to fix those ports so that Nigeria can become more of a destination that will then become a hub and send goods back to those places rather than the other way around. What we have now is that goods are going into Benin Republic and into Togo and then finding their way across the land borders into Nigeria. We need to reverse that. If we do that, then we can significantly boost the volume of trade that we're also having with those countries, and eliminate the unregulated movement of a lot of the goods that come into those countries coming through the porous borders. They don't come in through and pay duties as they ought to. So this is also a challenge that we also need to address as a matter of urgency, if you ask me.
Thank you so much. That's a safe place for us to land, Souk. You have been very gracious, and we do hope that when we call on you again, you'll be a part of the show.
It will always be a pleasure. Thanks for having me.
Thank you. So I have been with, like I said earlier on, Souk Segun, the chairman of Accountability, Candor and Transparency Network. And we've been talking about cross-border transactions between Nigeria and her neighbors. We also looked at pitfalls, challenges, as well as potentials. It's what we do on Business Insight. So if you did have a good time, why don't you join me again, same time, same station, as we count down to the weekend. Until then, my name is Vivian Uguche. Have a beautiful day ahead.